expert, especially amongst others up here. So, but as I thought about it coming in this morning, I thought maybe that's appropriate to talk about the Africa region, because I think it's fair to say that, you know, we haven't really been having, you know, U.S.-Africa strategic trade policy discussions or thinking for quite a long time. The policy discussion in this town probably for 20 years is, when is the AGOA renewal? Do we have the votes to continue AGOA? That's basically I think, has defined U.S.-Africa trade policy for almost 2 decades. What I thought would be interesting then is to talk about some of the underlying dynamics, at least that I see as a private equity investor, that I think is going to potentially change some of those discussions, because I think those discussions aren't necessarily based on policymakers' views in a vacuum. They're based on policymakers' views connected with the companies and the businesses that are actually happening between the U.S. and Africa. And I think looking at trade data can really take you in the wrong direction. Obviously, most of the trading relationship between the U.S. and Africa, and in some ways Africa and some parts of the world, is defined by extractives and has been for some time. But I think if you look at the diversity of the number, it's changing. And it's changing quite a bit. And, you know, if you take a big step back, I think, you know, so for us as investors, we are very data focused. We have a spatial statistics tool that helps us identify pockets of demographics and consumer behavior and spending power. And so for us, we're very data driven in terms of where we make our choices. And I think when you look at data driven multinationals and look at their behavior in the last just 5 years, I mean, this I think is very recent, and I think the more data driven multinationals are at the front edge. You see them making quite significant bets across Africa, and you already see it yielding quite significant results. I mean, you know, the one that I think you hear the most is General Electric. You know, when I was living in North Africa, you know, we'd see the General Electric team from time to time, very rarely. Obviously, you know, probably on the infrastructure side of our portfolio at the African Development Bank, I would say 60 to 70% of the procurement was China. I mean, these are significant numbers, tens of billions of dollars. And after that, it's primarily Europeans, Italians, French, and all of those countries and their associated, you know, trade experts, I think, were taking very strategic views on the agreements. Most U.S. companies weren't even competing in the tender process. I mean, not even submitting bids. You look at General Electric today, so I would say 2010, they were doing maybe $1 billion in revenues in Africa. Today, they're doing $5 billion. That number is expected to be $10 billion within the coming just few years. And I think, you know, when you think about General Electric's growth of their top line globally, that's where their growth is coming from. And I think when you look at large multinationals that are looking to increase their top line, these are the ones that are now making a bet on Africa. I mean, another example that some people aren't talking about as much, which I think is pretty dramatic, is Anheuser-Busch InBev, you know, owned by 3G, big-time data people, big-time responders to data, and they just bought SAB Miller in Africa for $100 billion. I mean, that's a bet. That's a bet on Africa, right, in terms of where they think some of their top-line growth is going to come in the coming years. But I think it also talks about how the trade dynamics are going to change quite considerably in terms of from extractives to consumer and other types of products. And you know, the numbers are there, right? I mean, you don't have to look out too far to say the top 3 most populous countries in the world are in Africa. You know, Lagos and Kinshasa are going to be 2 of the largest cities in the world, you know, in the coming decades. You know, I'm from South Florida, so I get a lot of Cuba talk all the time in my house and in my neighborhoods. And, you know, and my response is always, you know, I love Cuba, I love visiting Cuba, it's a dynamic place, but, you know, the GDP of Lagos, the market of Lagos is about equivalent to Cuba. And that gap is not going to narrow, it's going to widen. You know, and Nigeria's got another 20 cities that are going to have more than 1 million people, 1 million consumers. So when I look at those trends, just the demographic trends, the economic growth trends, it's going to drive a lot of the large corporates, their behavior. And I think that's going to follow and create a much more strategic dialogue on U.S.-Africa trade policy. I think in some ways, I think it's fair to say we're behind on this. I mean, as an investor, I would say, the Chinese have bilateral investment treaties in almost every country in Africa. The Germans have bilateral investment treaties in almost every country in Africa. The French, a number of European countries, I think we have bilateral investment treaties in maybe 3 or 4 countries across the 55, and most of those were negotiated in the 80s. And then most of those were still driven by extractives. I mean, and I think it's like, for me, I look at the top and I say, well, what's really going on at the bottom that's driving the top? And I think the bottom is shifting quite a bit. And the other thing I would mention, which maybe will sound a little out of left field if I'm not already in left field, but is I think when we think about the sharing economy, and something we talk about a lot here in the US, whether it's Uber or Airbnb, I think about it both ways, both in sharing of assets and supply chains, but also the ability to aggregate smaller items. We're invested in a company in New York called Ashosi. It's a marketplace for really high-end African fashion, kind of luxury fashion from Africa. We have about 30 designers. Most of those designers were not shipping their goods to the US previously, and the ability to share in existing supply chains, the ability to aggregate people who have small production, create artisanal type brands, the ability to not have to hire a New York big marketing firm and use social media and get your brand out. I mean, our lead designer, Macchio, Beyonce wears Macchio, the First Lady wears Macchio. The ability for Macchio to do that and have that reach and now become part of the US-Africa trade story, you think about how those voices are now going to play into a trade policy discussion. So, in my opinion, we're moving from a place where you had a very small number of interested parties, primarily extractives, that were, and that's not entirely fair because certainly the apparel industry has been very, very aggressive, I think, in exploring and thinking through kind of the Africa opportunity. But I think historically it's primarily been a small handful of extractives defining the discussion, and now we're moving to what looks to be, I think, a quite democratic discussion from both larger multinationals, but also small players that I think are now going to start thinking about trade, thinking about global markets in a very different way. And I think in Africa, they're going to also drive a lot of the public, I think more so than in the US or in Europe, they're also going to drive public opinion. I mean, I would argue probably more people are going to listen to a Macchio than might listen to President Buhari. So I think, and these folks are becoming very much global traders. So I think that's also a dynamic that is not fully taken into account in some of these discussions. It's certainly a big driver in the Africa